August 15th, 2020. Maria Thompson signs a mortgage for $280,000, chasing the dream of homeownership in booming Atlanta. Less than 3 years later, her house is gone, lost at auction for just $206,000. Thousands across Georgia are watching their futures vanish in the real estate crash no one saw coming. What triggered this unprecedented wave of loss? The answer begins here. Maria Thompson's journey from hope to heartbreak is written in the documents she saved. Her mortgage note, signed on August 15, 2020, spelled out the promise: a $280,000 loan, 30 years to pay it off, and a fixed rate that would soon become adjustable. The excitement of moving into her 1,900 square foot home in Fulton County faded quickly as rates began to climb. By September 10, 2022, Maria had missed her first payment after the reset. The county court filing, case number 2022CV33141, landed in her mailbox just 3 months later. The numbers on the page told a story of mounting arrears, 5 missed payments, $14,000 behind, and no way to catch up. On March 1st, 2023, the auction certificate confirmed the loss. Maria's home sold for $206,000, erasing nearly $75,000 in equity. Sentinel-2 satellite images from September 10, 2022 still show the house intact. By April 22, 2024, the parcel is vacant, the structure gone. County records show the demolition permit was not filed until May 10th, nearly 3 weeks after the home disappeared from view. Maria says, her voice steady but hollow, "Within months of my payment jumping, I knew I could not catch up. I lost my home and nearly $75,000 in equity." Documented right here. A senior Fulton County assessor puts it simply: parcel status updates often lag physical change by 2 to 4 weeks, especially following a foreclosure demolition. Atlanta's housing market transformed, almost overnight. In the first quarter of 2019, the median sale price stood at $280,000, with about 22,500 homes listed for sale. By the start of 2020, prices edged up to $290,000, but the real acceleration came after the pandemic began. By the third quarter of 2021, the median price had jumped to $340,000, while available homes dropped below $16,000. Just 9 months later, in the second quarter of 2022, the market reached a fever pitch. The median price hit $365,000, and inventory shrank to only 13,900 units, nearly a 40% drop in supply over 3 years. Quarter after quarter, buyers faced fewer choices and rising prices. CoreLogic's home price index shows a relentless climb, while Georgia's Department of Community Affairs tracked shrinking inventory. The pressure squeezed out first-time buyers and forced many into riskier loans. The pace of appreciation outstripped wage growth, and the lack of homes on the market left little room for negotiation. This environment set up a dangerous dynamic. Borrowers stretched further, often agreeing to adjustable-rate mortgages they might not have considered in a calmer market. The numbers reveal a market racing ahead of fundamentals, with each quarter tightening the vice on would-be homeowners. Federal Reserve meeting dates in 2022 read like a ladder: March 16th, May 4th, June 15th, each step pushing borrowing costs higher. For homeowners with adjustable-rate mortgages, these policy moves were not just headlines. They became monthly bills. A typical 3-1 adjustable-rate mortgage originated in September 2020 and reset in September 2023, just as the secured overnight financing rate hit 5%. Lender margins averaged 2.5%, so reset rates landed near 7.5%. Payment shock. For a $200,000 loan, the monthly payment jumped by $595 overnight. On a $350,000 mortgage, the shock was $1,043. An increase of more than 70%. Borrowers who entered the market during the pandemic found themselves facing payment spikes that outpaced their wages. Many fell behind within 2 or 3 months of reset, triggering a wave of delinquencies that would soon appear in court filings and foreclosure data. James Martin's rural home in Lawrence County stood untouched in a Maxar worldview 3 image from February 1st, 2024. The roof and porch were still visible, parcel ID 0101790012, matching county maps. By April 10th, 2024, a second Worldview 3 pass captured only splintered debris and bare earth. Demolition unmistakable from orbit. Yet Lawrence County's official record lists the vacancy flag on May 5, 2024, nearly a month after the satellite caught the loss. Landsat imagery of the surrounding neighborhood traces similar patterns: intact homes in early February 2024 and sudden gaps by mid-April. For Martin, the physical erasure came before any paperwork. The satellite sequence delivers proof. Homeowners like him lose everything long before the record ever catches up. Foreclosure filings in Fulton County climbed from 245 in June 2022 to 334 by December 2023, according to Adams reports. At the October 2023 auction, institutional investors dominated. 19 out of 32 homes went to limited liability companies such as Atlanta Rentals and Metro Asset Holdings. Most of those properties reappeared as rentals within 2 months, advertised at $2,100 to $2,300 a month. Meanwhile, the HomeSafe Georgia program approved just 119 out of 412 applications in Fulton. Over half were denied or left waiting as deadlines passed. Housing attorney Lisa Grant points to case FD 2023-0098. Our client nearly lost everything because aid arrived too late. Advocate Malik Jones adds that the crash is not just numbers, it's homes gone, equity lost. With foreclosure deadlines and emergency aid windows closing, the winners and losers are clear, and the clock is still ticking. Today, foreclosure filings in Georgia remain 31% above pre-pandemic levels. As rates fluctuate and protections expire, stability for thousands hangs in the balance. The home is no longer a guarantee.